What's going on, people? It's your BP baby. Welcome back to another backtesting video. It's currently 5 a.m. It's late. If you've watched last ones, we're just going to be picking up from there. I'm not going to be explaining anything because, like I said, I'm just continuing from the previous episodes one. This is all we got done last time. Lots of stuff to have a look at there. So I definitely suggest you go watch that video. But right now I'm going to continue. Pick up right where I left off. So I was looking at this fair value gap. You can see we trade up through it, but we closed below it, which is nice to see. Things like this is good in price action when we're bearish, because it shows that we should continue lower, and any fair value gap shouldn't be closed in, because they act as like, I see them acting as little boosters, if that makes any sense. Like I see price using it as some kind of springboard to spring away from it and leave it. So we have this fair value gap here. It's nice to see this one get left open. This is a breakaway gap because we didn't trade into it. It can get traded into, but we didn't even look. We didn't even try. We got up to here and then we left. So I'm going to write this as breakaway gap, and that's nice to see when we're looking for exits. So where would I sell? Below this low, because I did just put my buy in before we started this video, so this part of the video, so put that here. And remember, we're looking at the Asian range currently. It's also important to look at the trading range. This is the 50% level. So again, just like we looked at here, same thing, guys, same thing. At the 50% level, we want to see us find some kind of resistance level and then trade lower into the lows. Obviously, I believe from here to here, this is all price distortion. As in, it's just here to drive us insane, because we do eventually take out this low. It's just it wants to do this all for like a good 5 hours or 10 hours or however long, and then we finally take the low. But what I'm saying is that this range, once we find resistance here, we should be rest assured that we're going to run into the low. Also, you'll notice that we took out this high. So we took out buy side liquidity, sell side liquidity, buy side liquidity, and now we're looking for sell side liquidity again. But you can see we don't take it out straight away. It engineers it here, and then we take it later on in the week, as you can see. So like, it's always telling a story. There's so much to it. But yeah, that's what I'm saying. Same thing here. Traded through that 50% level, closed. I expect us to touch it one more time with a fair value gap there. So this is all adding reason as to why I'd be selling from here. It's not just a matter of me wanting to sell here. It's coming in confluence with the fact that we're in a range at the 50% level. So all of these things are adding to reason as to why this is a fair place to sell, with our target being here, and obviously we've got highs here as well, so we can let go of some of our position here. And this is also a breaking structure. I don't want to see price come back above this swing high here, as in before we get to our target, which ultimately would have been here, I believe. I guess so, but price didn't do that, did it? Anyway, okay, so I'm going to go into the next section. This is an inverted fair value gap, by the way. Inverted FEG. So this should act bearishly once we trade to it, but we trade through it, which is interesting. I see this as a very high premium, to be honest. Maybe that's why we fell off so precipitously. Interesting. Right, so I'm going to just move my sections all over, so I'll be right back once I've got all that sorted. So we have some engineered swing lows here when I say engineered, I mean it was created so that price could take it in order to then sweep higher and start to move and run and make a really big London run. Again, we're going to be looking at range. Oops, we're going to be looking at ranges in terms of trading range. So once we start trading up into this range, we're now trading. Oh, sorry, I keep hitting my mic. We will then be trading within this range, this high to this low. So we can look at that now. You know what? I want to leave this on for that, so I'm just going to put that there. And let me just take off the price levels and the prices. There we go. And then we want to look at now this high to this low. And you can see our price steps up and makes its way up the ladder. So with this in mind, we trade higher, we have a breaking market structure here. So as soon as we have this breaking market structure, as the London kill zone starts, we see this fair value gap form. So we'd be looking for any kind of entry within this fair value gap, and we want to see this fair value gap get left open, meaning it can fill up to 50% at the most. And you can see that that's what happened, and then we start to move higher. So where would our target be? It'd be the 50% level, because price should at least trade to there. We also have a lot of fair value there, so it should be quite an easy run. And you can see this is a very low resistance liquidity run, as in price just easily moves or higher, support, higher, support, higher, support, higher, support, higher, support, higher, support, and then we can start to see we consolidate, sweeping off the highs made, and then we have a reversal in London. That's another thing I need to make sure I take note of, the time of day. At what time these highs were made. Right, I'm gonna quickly do that because I want this in my notes. Sorry guys, it's getting very messy, but I'm gonna start from here. It won't take long. So what I'm doing here is I'm just gonna create a price label, price note. I'm gonna create a price note, and I'm just gonna put high of day. Oh no, that's not how I want it. What? Oh no, okay, right, that's not what I want. Bear with me guys, I'll be right back. Right, so I've actually just marked out the high and low of the day. Although we made a higher high in Asia, I believe that's the right high. I'm not going to think too hard about this. But basically, I wanted to mark out the times in which these swing highs are getting made and swing lows. ICT makes it clear clear that it's important to recognize the time of day at when these things are occurring. And I can understand why it's so important, because then you can start to anticipate when it's likely to occur, like as in these important swing highs and swing lows. And it doesn't mean just going to the market when these swing highs and swing lows form, but I guess it adds confluence when I'm trading live and I can see what time it is, and I can say, okay, well, it's likely we're going to do this now because this usually happens at this time, etc, etc, etc. So this happened at 7:45. This is a high getting taken and taking a sweeping off liquidity. So I'm just going to mark these as just important points to refer to. And I might as well mark out these as well. 9:35, and I'm sure eventually I'll start to recognize some kind of, not pattern necessarily, but you know, there'll be definitely be a time scale where I'm noticing these highs and lows being formed. This is 8 p.m. not 9. So when was this low made? This low was made just before the just before I'm struggling here guys, London Open. This was at 1:45. So yeah, let's carry on where we were going from. So we have a breaking structure here. Let me make sure that's says breaking structure, break off structure even. Once we close above here, price shouldn't come back below this low. We can see a beautiful fair value gap. It's a lovely, lovely, this is a perfect ICT setup. Bread and butter. Fair value gap. FVG. And then we also want to mark out the 50% level of that just to show how price respects it. And I also want to get an entry. So I'd like to be buying here. I'd love to be buying there. That would be a beautiful buy. And then we should let off some of our position at 50%. So I'm going to put a sell here. And then we do have a gap from here all the way to here. And you can see this gap, although we trade right through it, this gap gets left open. And you'll notice that we also trade to the 25% level of that entire range. So this is all, I see this whole thing as a fair value gap. And we want to see if price leaves it. So once this candle closes and we get this expansion, I guess this is an entry in itself, because we can anticipate this to be left open because of the way we traded through it, and to the 50% level of this range. That's interesting. You see how price is constantly referring to a different level. Interesting. We trade to the 50% level of this one, 25% level of this one, this one. And you can see we start to hit resistance here as well because of this, all of this. And you see how it's stepping its way up this time. You can see how price also falls back to its order block. Does it fall to the open? It doesn't even touch it. Damn. Interesting. It's all interesting. All so interesting to me, honestly. Like, this is what I mean. This is why I love it. It's really genuinely fascinating to me. Like, and look, even things like this. Look, we have bearish order block here. Then it turns to a bullish order block. It just really boggles my mind, honestly. There's also a gap here. I guess this is what you call a measuring gap. I need to rewatch the video on that, but ICT does explain about measuring gaps and how there should be there's levels where you expect a measuring gap to form. I believe this is the measuring gap. Why? Because we didn't. Yes, I'm definitely going to watch that video again. I'm going to put this as a measuring gap. I believe this is a measuring gap. As in it's 50% of the total range. So once we get here, what would I start to target? Well, I guess I'll be looking at the range from here. Oh. Yeah, I'll be looking at the range. So once we reach the 50% level, I should now start looking at the range from this low to this high. Look at this as discount, look at this as premium. I look at any premium arrays. What premium wage do I see? This. So that would be my target. So I'd like to let go of my position there. Ooh. And that's at the break of structure. Isn't that coincidental? Wow, wow. That's so interesting. We have a break of structure here. Well, this is more like a consolidation. You can see how we're finding lots of support in this. And then we have a run above relative equal high. So this is going to be, what's it going to be? Buy side liquidity. And this run is created. When's it created? Again, we've got to look at the times that these things are happening. This run on liquidity. This run on liquidity is happening at 7:10, yeah. Which just happens to be the start of the the New York kill zone, just by coincidence. Just by coincidence. And what we trade into, this bearish order block resting here. What am I doing? What was I just writing? Yeah, so all this, I wouldn't be in the markets. And then if I saw us take out this buy side liquidity and we trade into the bearish order block, I wouldn't be comfortable selling here. Or I'd like to get to the point where I am. But I'd have to be sure that we're not taking out this swing high. And I know that for a fact. I wouldn't be 100% sure if we're taking out this swing high or not. Then again, we took out buy side liquidity here. So there's no need for price to want to do that. Furthermore, we're trading into a massive rejection block. Let's mark that out as a rejection block. Damn. And you see how price closes at it, which is, where do we have the breaking structure? Right here. So this candle, as it trades up here, we should see that as a sell. I know it looks crazy. I'm not going to put it because it's not realistic, but well, it's not realistic just yet until I become a god at this. That's why I'm doing this, guys. I want to become a god. You think I'm joking? Right. So this is a breakout structure there. Why here? Because this closes. As soon as this closes, price shouldn't go back above that. Trade lower, low, 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 low. You can see fair value gaps getting left. We don't trade into any of them on the 1 minute. See, this is where you need a lower time frame. On the 1 minute, there's probably entries all along here, but I don't see any. So let's say I did go crazy and manage to sell at that. That should be rotated. Where would I get out? Below this swing low here, and the relative equal lows resting here. This is sell side liquidity. I keep clicking that by accident, don't I? Sell side liquidity. Get out. Where will my stop be? Here. Where will my exit be? Here. It's crazy, isn't it? It's crazy. It's too good to be true. When we trade up here, we could look at this as a breaker. Why? Swing high, swing high, swing low. So I do see this as a breaker. So when price is trading up back into this area here, and there's a fair value gap on the top 50% of it, but when price is reaching up into this, I see this as a breaker, and it's respecting the 50% level. So this is another reason why I see this as a potential sell. Where would I be selling to? Honestly, I need to look at the new range. We need to look at the new range, guys. Let's look at the new range. Right, that's going to be this high now to this low. It does look like I'm just looking at ranges, but this is really helping set my targets. So we're here. I'm expecting us to at least reach 50%. So where's the swing low in the 50%? Here, so here as well. Okay. Wow. This is making a lot of sense. See, this is the importance of backtesting. I just discover things by myself. And when you discover things by yourself, I'm sure you can understand that. You understand it way more. I've wrote here, price trades into the breakout, respecting the consequent encroachment and the previously formed fair value gap in a bearish order block at a key level. And I say it's a key level because of this sell side liquidity resting there. That's why it's a key level. And you can see we traded through it and we're finding resistance at it. So it's saying goodbye. Wow. And I want to mark out the 50% level off the breaker because ranges are important, guys. I really like this Aussie dollar. Like, it seems like it's very well behaved. That's what we like to see, if you know what I mean. Right, cool. So we move lower, lower, blah, blah, blah. So is that a sell? Yes. I'm sure there's a thicker arrow that I wanted to try use. Is he going crazy? That's interesting. Aha, this is the one I like to use. I'm going to start using this one instead. So we want to be selling here on this candle. Where am I getting at? Right, this is what I was thinking. So let's say I'm in this range now. 50% level at least, but I should be, so there's fair value there. So we could sell in the measuring gap. Where would my stop loss be there? So that is still, so this swing low is still a potential position, place where we want to leave the market. So I'm going to put a buy a, oh no, I'm using this one now, aren't I? So here, because it's below that low. How long we've been going? Damn, 23 minutes. This is taking a long time, isn't it, guys? Wow. I'll be surprised if any of you actually watch this completely, to be honest. I'll be very impressed. So why here? Sell side liquidity. I'm definitely going to have to make another episode. But content's content, and if you're learning, it doesn't really matter because I'm doing this for me. Right, sales liquidity there, so that's why I'm selling at these levels. We then move up, touch 50% level, and turn away straight away. Is there a fair value gap to complement that? Oh, sugar. Right, there's this. Look at this, guys. You can't make this up. You can't make it up. We respect the 50% level off the measuring gap once again. You can't make it up, and then we move lower. So that's another selling opportunity. It's crazy, isn't it? And then where would I get out? Below this low, so it'd be this candle. Get rid of that. And I'm gonna end this video right there. Guys, if you got this far, honestly, thank you for watching. I hope you had a good time. If not, well, it is what it is. But this has been GBP, baby. I'll catch you in another backtesting video. I'm going to get to sleep because it's hella early, but I'm definitely going to do some more of this because this is really interesting to me. If you join the Discord, you'll have access to all of the screenshots I'm about to take. And yeah, I'll catch you in the next one. Thanks for watching, guys, and I'll see you later. Peace.